The subsidiary of the South Africa's Absa Bank has reported a 15% revenue jump for its financial year ended December 2024, and speaking at a press briefing that reviews the lender's operations for the past year. Officials of the bank also briefs on the macroeconomic dynamics that impacted on the company's activities in Uganda for last year. Let's take a brief of that.
Reflect a year of exceptional growth with increased revenue, an expanded loan book, and robust customer deposits. These achievements reinforce our position as one of Uganda's top banks. The growth in deposits speaks to the trust Ugandans place in us to safeguard their hard-earned money and fuel their aspirations. The increased lending has empowered businesses from SMEs to large enterprises, illustrating that when Uganda's economy grows, we all prosper. These results are a testament to Absa's team's innovation and resilience, whose dedication turned challenges into opportunities throughout 2024. Looking ahead to 2025, Uganda, like much of the world, is likely to face an uncertain economic environment influenced by global shifts driven by major changes announced by the new US administration. Geopolitical tensions are expected to remain high, with ongoing conflicts such as the war in Ukraine and tensions in the Middle East continuing to create some level of economic uncertainty. And of course, we're now faced with the most recent, the whole issue of tariffs, which is creating a lot more uncertainty everywhere. These global factors, alongside regional challenges, could affect Uganda's economic growth, trade relationships, and requiring adaptive strategies to navigate the volatile global landscape. So while we recognize the challenges ahead, the board remains confident in Absa's ability to navigate uncertainties, seize emerging opportunities, and remain aligned with our core values. Our strategic focus continues to be on enhancing the customer experience. I think we should continuously be obsessed with ensuring that customers are continuously satisfied at all times, expanding our product offering and solutions, and leveraging technology to strengthen our digital capabilities, all while ensuring the highest level of security and economic stability. We're committed not just to growing profits, but also to sustainable banking practices, incorporating ESG factors into our risk assessments, and being an active force for good in everything we do. This includes upholding our corporate citizenship and sustainability pillars to protect the environment and uplift the communities in which we serve, essentially operating with a conscience.
Uganda's economy demonstrated remarkable resilience in 2024. Real GDP growth accelerated to an estimate of 6%, up from 5.3% the previous year, driven by strong investments in the oil sector, favorable weather conditions, and the rollout of the parish development model. Inflation was well managed, averaging just about 4% over the decade, a record lowest in East Africa, and the second across the continent after Mauritius. Headline inflation fell from 4% in July to 2.9% in November, thanks to prudent monetary and fiscal policies. The Uganda shilling remained relatively stable, supported by export inflows, remittances, FDI, and a liquid interbank foreign exchange market. This macroeconomic stability put forward a foundation for us and our banking operations, allowing us to extend credit and deliver inclusive financial services. Our 2024 performance reflects our long-term strategy and relentless focus on customer needs. Key highlights are revenue growth of 15% to 546 billion, driven by increased demand for risk management products and increased lending to our customers. Profit after tax rose by 22% to 178 billion, reflecting strong returns for our shareholders. Net customer loans grew 12.7%, powered by a robust uptake of trade loans, asset finance, mortgages, and credit cards. This growth underscores our confidence in Uganda's private sector and our role as a key enabler for business expansion and household empowerment. 2024 marked our first full year operating under our refreshed brand promise, Your Story Matters. This commitment reshaped our strategy, making it even more customer-centric. Every loan disbursed, every innovation launched, and every conversation we've had with our customers has been driven by the belief that the bank should be personal, relative, and transformative.
So looking at the financials, 15% growth. And why do we take time to share these financials? It's important that you're banking with a solid bank. So as we share these financials, you get to appreciate how much customers have trusted us. So 15% growth in terms of total revenue. That is driven by net interest income of 11%. That number generally is connected to what you are seeing around the asset growth. Asset growth being 13%. It's also a reflection of the pressure in the industry, the fact that you're seeing assets growing higher than what you're seeing on the net interest income, clearly showing that interest rates are dropping. So throughout 2024, we saw pressure on the interest rates, the fact that those were dropping. Non-funded income is really the revenue we have care of the fees and commissions. It's also a reflection of the fact that customers are trusting us to do more transactions. And we've seen that grow by 21%, which is a clear reflection of that trust. And the fact that customer liabilities also grew by 12%. Expenses, we did have a growth of about 9%. If you do remember, inflation was about 4-5% for last year. We had to invest in technology to ensure that we serve our customers better, but we also ensured that our staff are well taken care of, hence that further increment. But when you're looking at financials, it's important that you articulate how was the growth in income vis-a-vis the growth in cost. And clearly you can see that the difference between the two numbers is about 6%, which is a clear reflection of a healthy income statement and healthy performance of the bank. Profit after tax is 22%. This is where I expect some Bugalo. Very good hard work in terms of colleagues and the trust the customers have shown us. And it's important that even as we show these financial statements, they are double digit throughout.